Good morning, guys. Good morning, everybody from Cincinnati. I hope everybody's doing good. 8:45 right. Switched over to 8:46. I'm in a great mood today. You know why? Somebody give me the double announce. Oh, John, we started right now. Somebody give me the double knock here, and I'm going to tell you why I'm excited. And it's not because the market's going to be up another 400 points at the open. JP Morgan kind of day. Yep. I do remember, Jerry. I do remember. Knock, knock. Thank you, John. Somebody's going to space today at 4:33. That's exciting. That's amazing, folks. I mean, I'm excited about the market, but somebody's going to space this afternoon. Are you kidding me? This is really kind of nerdy good stuff. I hope everybody's looking forward to catching the SpaceX launch this afternoon, 4:33. Down in Cape Canaveral. I'm assuming John is online, and John should definitely be watching since he'll be somewhat close. Yeah, somewhat close. Good morning to everybody. Good morning. So we got a lot to talk about. I'm going to try to get everything done in as quick a time as possible here because I've got to get ready to trade. Absolutely. First Americans to lift off in an American rocket from American soil for a while here. This is USA type of stuff here. USA. So I need to go and watch maybe Miracle tonight afterwards and really get pumped up about everything. Anyhow, let me tell you what we've got to talk about today. We're going to talk about the small cap breakout. You and I have been talking about the Russell 2000 and how it's been lagging the market for the last couple of months here. And in this particular case, are you kidding me? James, you need to get some pictures and somehow get them sent in, somehow get them sent in to me. Anyhow, small caps taking off right now. We're looking at small cap short squeezes this later in the slide presentation this morning, because this is the area you want to play in. And when I say play, I mean make money. So the other thing we're going to talk about is a little bit of the large cap tech. There's a money migration that's going to happen here. We saw it yesterday as the NASDAQ 100 actually closed in the red, just a small bit, but it closed in the red. So the names like Intel, Microsoft, NVIDIA, those companies that make up the top of the QQQ, the cream of the crop in technology, are now seeing a pullback. Small cap short squeezes. So it's not a sector, it's a CJ sector. It's something that I should be making up as an index for you. But anyhow, there you're really messing us up with the on cap, off cap there. Anyhow, I can't decide whether you're whispering or yelling it at us. Anyhow, we got to take a look at the large cap tech stocks. I got a little bit of a warning for you. It's not really a warning. It's not like they're going to come down to the earth, but this is where a lot of the money has been made for the last 2 months. So this is where the money is going to get redistributed for the next couple of weeks here as people start to pick up some of these sectors that have been lagging behind. Boeing announces some layoffs. Again, we've got a lot to talk. Let's go to the screen here, okay? Hope everybody's doing good. Hope everybody's excited for bump day today. It should be a good one. So as I mentioned, we're up more than 450 points about on the implied open right now on the Dow. S&P 500, and I'm just putting it up here because we talked about it yesterday. We're going to review it. S&P 500 giving a bullish signal yesterday along with the VIX. So they both gave us that signal. We listened. We were getting bullish. And now, obviously, yesterday we got a payday. We didn't get it across the board. If you notice, it was more in the Dow. The Dow took off. The S&P 500 lagged. And then the cubes obviously lagged. So one of these situations would Jerry's bragging about luck and coffee. It's dirtiest hamper in or cleanest hamper in the shirt in the hamper there in that situation. But I'm with you, Jerry. You trade where you can make the money. So the new money migration is what we're going to talk about for a little while today. Our targeted sector for the day is going to be the small cap short squeezes. And then we'll talk real quickly about trading bump day. So let's jump in. Yesterday, we talked about, and this is a carbon copy from yesterday. I mentioned the building of a bullish signal. It triggered, even though the S&P 500, when I say the S&P 500 resisted, it's the S&P 500 did not close above the 3,000 mark. And it hesitated to go across that 200-day moving average. And what that's telling you and I is that there's still a little of a projectile bump that we're going to see here as traders trade above that. You want to watch those lines today, though, because it really is going to dictate what happens over the next couple of days. If we really do get a continuation with the financials kicking in, and the small caps kicking in. This is going to be, that's my point, Jerry. Money is money. I'll wear a dirty shirt to make some good profits, to make some clean, fast profits. So if you look at this right now from the situation of the market, the S&P 500 holds back. Now, remember, the financials are a big weighting on the S&P 500. So we need to watch those financials today because they roared yesterday. They took off. You've got a lot of the technology and the industrials that are holding it back. I think they're going to start to play a little nicer today. Let's look at the news. The House is actually saying that they're set to back China sanctions amid rising tensions with the United States. Notice how just within 2 days, we've seen the China situation kind of drop off into the background a little bit here. People are paying attention to the market and what's going on with the market. This morning, the news was that the Senate, and as early as yesterday afternoon, Mitch McConnell was talking about how he didn't think we were going to need more relief. They want to hold off and see what's going to happen. Well, guess what happened overnight, late last night or late yesterday afternoon? Senate is now open to more stimulus. As McConnell indicates, more coronavirus will probably be needed. Now, this is just good old-fashioned politics, folks. We're going to see this a little bit. If the House puts together a bill and tries to push it to the Senate right now, the Senate's going to say we don't need it. But the Senate can come up and say, hey, we're going to put together a bill very quickly. We're going to work with the president. And, Stephen Mnuchin will go over and work with the House and the House Speaker there. And it is literally just trying to steal a little bit of the limelight right now. So watch what Mitch McConnell says, because honestly, and unfortunately, but that's where the signals are going to come from right now. It's not going to come from a unified front from both the House and the Senate right now. It's going to be the Senate saying we need to get things done because the Republicans want to keep the light on. So exactly. And Andrew, I think this is a great point here. What's another trillion or two when you own the printing press? And instead of coming out with these huge gestures of, and they may be needed, but these huge gestures of stimulus. And just a couple of days ago, Mitch McConnell was saying that we're not going to see anything else coming down the pike for a while here in terms of stimulus. So I would look for the Senate to put something different together. Get away from the idea of checks being sent to people's addresses and that money is just kind of thrown into a pot and hopefully it gets used. I expect them to be a little bit more targeted about their fiscal approach this time. If you watch the Shark Tank, Mark Cuban, who's a genius, and I think everybody knows that, and I'm sure his balance accounts show it. But not that you have to be a genius to make the kind of money that Mark Cuban makes, but the guy's a genius. One of the things he said is let's just basically use the EBT system to give people, $500, $600, maybe even $1,000, but they get benefits or bonuses for spending it at small local businesses instead of going to large chains. So they go down the street and spend it locally instead of going to, the Best Buy or someplace like that and buying a TV. They actually get to go and put it into the local economies, which would then stimulate jobs. Forget about giving money to people that have jobs or that don't have jobs. Let's stimulate economies. And that's just an amazing idea. And I think you'll see some of that start to seep into the fiscal stimulus that we'll see. They're going to have to get more creative than just blasting money, opening up the bazookas. But you're exactly right, Andrew. We own the printing presses. They're going to fire up every one of them, and we're going to see a lot of money printed here. The dollar's going to go down. Keep those gold positions right now, not only as a bit of a hedge. And yes, you should still have hedges on, folks, even though I'm brimming with bullishness right now. I ran out of breath. You still need to have hedges. Hedges are not a unmute by clicking on my nose once the loading is done. You guys say the funniest things. So we're bullish right now, but the hedges still matter. The hedges are you put that hedge on and you forget it. Set it and forget it, as Mr. Popeil said of his Ronco rotary or rotisserie grill. More businesses are reopening across the country as Los Angeles and other large metro areas are opening. We're going to see this be the news headline, especially going into the weekend, because we do see more. There was a story last night on Bloomberg about how the traffic patterns are actually booming again in Los Angeles. People are driving on the road and they've got gridlock. Watch for these signs right now that we're not only seeing openings, but also watch very closely as they start to watch what's going on with the testing in these areas and find out if there are any increases in infection. Hopefully they're not going to go out and say, well, we're just going to start blasting out the testing now, because that obviously will bring up, Sarah, great point. We'll get to the airlines in a second. That will bring up, obviously, the infection rate, even though, and they don't report it as a per capita number, which I really get bothered by the fact that they don't. But even though I'm sure per capita, we're still relatively similar. And then finally, Boeing announces more layoffs. You know what? I said 2 weeks ago that I thought Boeing was in a good place, that you may want to go ahead and buy or start to nibble at Boeing shares. I don't know if I was too early to the party. I don't think I was. This might be a situation with the stock at 140 and it starts to maybe go back to 120 again. 120 is where I was telling you to buy. Anyhow, we'll look at the chart and go from there. Let's jump into the actual meat of what we're going to talk about today. Here's that test of the S&P 500 yesterday. Look at how poignant and how absolutely pure the test of that 3,000 and the 200-day moving average is. Look at what the 200-day moving average closed at, 299.98. 2 pennies away. 2 pennies away for the from the 3,000 level. We're going to soar above the 3,000 level today. So this is going to be that confirmation. Notice the jump in volume that we saw yesterday. I was complaining along with Donna about the volume last week and how we saw that trickling off. Boom. Here's the response we get, which is exactly what we wanted. Kind of similar to what we got when we were bouncing off that 20-day the week before. So volume's coming in. We're clearing that hurdle right now. We're going to be clearing 3050 real quickly here, is the bottom line on the S&P 500. We're not overbought right now, so there's move for this rally to move higher. We may even shoot up to 3,100. 3,100 would be a little more than a chipping wedge. Maybe get the 9 or the 8 iron out of the bag for that, but I think 3,100 could actually happen before we get overbought, and we're going to want to watch those positions when we do get to that position where we're overbought. Just to give you an idea of how important that's going to be, let me drag this over here real quickly and look at that cube chart. There's your chart of your cubes. We're copping out right now, and this is what I've talked about with that money migration. Here comes your chart. Hold on a second. Let me get it a little larger for you. There you go. So you can see it a little easier now. 230 on the NASDAQ 100 shares ETF. You'll want to watch that. Look at how similar we are to that top that we saw in February. The NASDAQ 100 is almost taken out all of its losses here. And that is a sign that, remember, I've talked about mile markers. You know, whether you're in the 1976 Cutlass Supreme with my parents driving up to Maine for 3 days and you're watching every 100 denomination of the mile markers go by because you're bored as hell. Or in this particular case, you look at a mile marker such as, okay, we just erased all the losses from the COVID-19 pandemic. People are going to start to take stock of where they are. They're going to look at their positions like Zoom down yesterday, and they're going to start to take some profits. That's why you get this money migration. We're going to play the money migration right now. But we know, and you have to know, that there's going to be some sort of reconnection with reality at some point down the line here. Obviously, we'll get jobless numbers here in just a couple of weeks. And actually, it'll be next week. My bad. We'll get the jobless numbers next week, or the job numbers. That could start to shake us up a little bit. But again, if the Senate's coming out with stimulus, you have to know that some reality is coming back. If the Senate is starting to talk about stimulus, there's your indication. But for now, we watch the areas like the NASDAQ 100. And the way that you watch those, remember, hedging 101, the first hedge that you can put in your portfolio is to put a trailing stop loss on some of these positions. It might be up 30, 40, 50, 60, 80%. You go ahead and you put your trailing stops on those and you let them come out of the portfolio as the market starts to shift, or as that area of the market starts to shift. Put that money to work in an area such as the financials right now. It pains me to say that, by the way, folks, but as Jerry said, you know, I'll wear a dirty shirt around if I can make some good quick money with it. Not that I want to get in the habit of it, but that's where the money is in the market right now. Let's go back to the slides. You don't want to watch me too much here. So when we look at what's going on, you know what? We shaved the 200-day and the 3,000 level. Look for that to get blown away. I'm going to watch volume as well, telling us that more people are coming in and participating in this rally. The fear index also slumps to its lows from last week. We're going to take out the 25 level, I think, today, and that is going to, maybe 25 might be a bit more of a shot that I'm willing to say that we could take. But my guess is we're going to be close to 25 by the end of day's trading, and you're going to get more and more people that are going to be signaling in on, hey, it's time to get in on the short term. Again, you've been with me a while now. You know that I'm not a roaring bull. I'm starting to sound like one, but I'm just getting excited. Somebody's going to space this afternoon, but I'm also excited about the fact that I think the market's going to tack on another 2 to 3% today. So, and we're going to make money as we do it, as we watch that happen, as we participate. Let's go back. Sorry. So we talk about the fear index slumping. It is going to be at some point for somebody who's eventually going to ask, when do you buy the volatility? When do you buy the VIX? I think it's going to be sometime around when we're battling with the 200-day moving average trend right now around 24, even for the sake of us getting a bounce back up to 32 area, somewhere like that. You can make a really quick play there if you like with the VXX options. Don't play it just buying the ETN itself. You want to get an option that's at the money, maybe 2 weeks from expiration. For those of you that are out there that are a little more active, that's the play you want to make. Not right now. Let it unwind down to that 200-day though. Moving on, the S&P 500, I think we target the 3050, and I really think we stretch that. If you look, 3100 is the point where we tried to come back up to when we had that first decline in March. Boom, there's your first one. Rally up, larger move, rally up. Look at this consolidation we've got going here, though, folks. If it weren't for this breakout, or this potential breakout above 3,000, I see that you would pretty much have a situation where you're looking at this is yesterday's chart before we saw that volume come in. You were building towards a situation where your technicals were going to start to push us towards a tilting point that probably would have come down and retested that 2750. 3,000 breaking above and taking out these highs is huge, and you can see how we were trying to do it here. That means for now, we ride this wave. So what about that new money migration that I'm talking about? What is a migration? So a money migration, put simply, is, well, exactly what it suggests. It's money moving from one area of the market to the other. You know, when I was growing up, you know, I grew up around farms. So we had, you know, migration of cattle that would go from pasture to pasture to pasture, wherever the grass was green. Wherever there was greener grass that they could eat, that's where they went. That's what happens with the markets. It's as simple as that. You can take it down to the same reason that Ollie's going to go up another 5 to 10%. Ollie's unstoppable here, Paul. I wish I could buy it. It's just overbought so far. TJ Maxx is what you jump on right now instead of Ollie. TJX is the ticker symbol right now that you want to grab. Maybe 5 below. Also, American Eagle and Abercrombie & Fitch looked good too. So let me finish with the migration here. So wherever the grass is green, that's where you find the cows go. The same thing happens with the money, with the market. Wherever the grass is greener, wherever it's longer, that's where the bulls are going to run. In this particular case, we've run the course in the QQQ. And at this point, they've chewed that grass up. It's nothing but stubs left. So they have to find something else. They're looking for the underperformers, the laggards in the market. Large cap technology is seeing pressure, not weeing pressure. There's your typo number 1. Small cap or risk on stocks. Let me put you back up on there so you can actually see the typo too. There we go. Small cap risk on stocks are now booming through technical resistance. So they're really fine. They're flying right now. Financials are punctuating the move as well. Even the bears need to ride this trend. So even if it is me who has been bearish, you know, holding JP Morgan puts, looking at the XLF and telling you that there's some relative weakness here. This is a time when that relative weakness gets mitigated, gets taken away, because the bulls are looking for the taller grass and the financials have been sitting around just doing nothing. Nobody's been eating them. Financials and a lot of these small cap stocks, and small cap started last week, but now we're starting to see volume come into them. That's where you need to be for the next couple of weeks. Right now, you've got, and Jerry, I don't disagree. Yes, thank you very much, Greg, for the weeding pressure. I don't disagree that it was happening yesterday. I think the sector rotation continues. The pool is deep enough in small caps right now that you're going to see it continue. So last week was, I left this in, I'm sorry, from yesterday, because I was trying to use some of my slides from yesterday to talk about the trigger. And that's actually a good thing to go back and readdress or re-hit for a second here after the small caps. But the small captor is picking up steam. The companies are loaded. This is the sector, when you look at it, it's hard to call stuff in small cap growth. This is from growth to speculation, Jerry, instead of growth to value. I think value investing, and I don't think this will be the first time that I say this to you people, value investing is somewhat dead. I hate to say it, but value investing, when you can't figure out the P and the E or one of those without some pretty elaborate math, you've got a value investing equation that just doesn't work for you consistently. Right now, short interest, and this is one of the things that a lot of people don't know about the small cap. And of course, there are a lot of biotech companies in the Russell 2000. But when you look at the top 100 companies, the top 200 companies, the average short interest ratio for these companies is around 4 or 5. Average short interest ratio for the S&P 500, about 1.7. Yes, you buy the IWM, John. About 1.7 for the S&P 500. You're talking about more than double on the small caps. And it's because it's a speculative area of the market. People are going to speculate there often. Shorts hit these stocks. They think they're going to go down. Right now, it's one of those situations where we're going to continue to see the shorts get squeezed in these small cap names. And that's where you can make some money over the next couple of weeks. And we're going to look at a couple of these stocks, and they're going to be names that you probably haven't heard of. I do have a name or two on my list that are actually very, very attractive, but that you probably know. But I've got a couple here that I want to show you stocks that you probably haven't seen. So these are the companies that are going to see a migration of cash as people are moving out of large cap tech and other areas, but also get a kicker from the shorts covering their losing bets. The first one, may have heard of this, Cleveland-Cliffs. CLF is the ticker symbol. Now, they just recently, over the last year, acquired AK Steel, which is in Middletown, about 25 minutes away, 35, 40 minutes away from me. My father actually retired from AK Steel less than 5 years ago after working there for 45 years. So you've got a situation in this particular case where materials are starting to get. You keep the hedges, Larry. Anything that is tagged a hedge in the portfolio, folks, you want to keep. A hedge is a long-term hedge. It's not a speculative play. It would be different if it were a put that we were using to play or to speculate on near-term movement. A hedge is a long-term, and I've been adding to my hedges. Full disclosure, I told you yesterday I was thinking about it. I added to my hedges yesterday, personally. Anyhow, Cleveland-Cliffs has been acquiring. They're in the materials area, steel, pellets, et cetera, breaking above $5 right now. Short interest ratio on the company's above 8. We don't have an oversold or overbought situation. It's right in the middle right now. Volume is picking up. Cleveland-Cliffs breaks that $5 level. I think you see it shoot up to $5.50. That's a 10% move, folks. On a $5 stock, that's a 10% move. That's easy. I shouldn't say that. There's no such thing as easy money. I think we all know that. But in this particular case, this is maybe using a granny shot to win the game of horse if you're out playing horse. This one is from a chart perspective, from a volume perspective, from the short interest, from the sector perspective. As materials start to pick up, this one has every aspect. It's a short-term play. It's not like a hedge where it's a long term. It's from 5 to 550. So there's your first one for the day. I've got 3. Cleveland-Cliffs. I like the play from $5 to 550. And if it even wants to stretch up and really get its legs going, you maybe head up towards $6 here. But you keep in mind that this is a trade, folks. This is not an investment. The steel companies have not done well. As soon as the tensions with China start to flare up again, steel is one of those areas that really starts to get hot. Actually, I should say cold. Here's one that probably nobody's heard of, Independent Bank Group, IBTX, Tom X-Ray. I don't know the mnemonic for B. Somebody, I think it's John, will come in and give me the B mnemonic here. Beta, probably. Anyhow, breakout, and we saw the breakout before we had some fundamental news come in on the stock. We're nearing some overbought. I love the way it stretched up to 36 yesterday and obviously filled in this gap from where we saw a gap lower in March. The company is going to make a move probably up to 40, 42 here. Short interest on the stock is over 10 right now, up 16%. A lot of that was probably, thank you, Steve, bravo. A lot of that was probably some of that short covering getting out of the way. I think you got another couple days here where the stock is probably going to make another run towards that $40 level. Thank you, Greg. India, bravo. That's what I'm looking for. And there's John. Good morning, John. I think you make this run from 36 to 40 within days, not weeks. This is going to be a quick and fast move because look at what's going to happen here as we get overbought. Stock will roll over, probably retest that 20-day and take over again. IBTX, bullish over the next couple of days. Nice little aggressive play. $32, not as cheap as that Cleveland Cliffs. And I love the Cleveland Cliffs at $5, but cheaper options on that. But these are at the money type of options play, maybe even a little bit out of the money. Cleveland Cliffs, you stick with the $5 strike. Callaway Golf, I mentioned Callaway yesterday. I had to mention it again today. Look at what it did yesterday. Shot up, opened above 16 at the open. And this is the pattern that we saw in a lot of the stocks yesterday. Open high, and then we migrated lower throughout the day. S&P 500 did the same thing. Opened high, came back down. I can tell you from being out on the golf course over the weekend, I'm going to go today, except for we got this, somebody's going to space this afternoon, so I have to watch it. John, you're going to watch it too, I hope, but we all better watch it. Everybody's got to write a little report and make sure they send. I need to know that everybody watched this because this is really cool. Anyhow, came back, filled into $15. It's building that base at 15. I think that I did Nirmala, CLF. If you look at the 15 level, we're going to build a little more support there, and I think that acts as a launching pad for the stock to head up to 17. I can't tell you how busy the Dick's Sporting Goods and other areas are, and I've been telling you bullish on Dick's Sporting Goods. I've got to watch what I say there. Bullish on Dick's Sporting Goods stores. DKS is the ticker symbol on that one. You want to be bullish on Dick's Sporting Goods stores. And because this is one of those almost like the Camping World, and Camping World is almost exactly like the Ollie's right now. You know, it is a stock that has run its course. Let's look at Ollie's real quickly so the people that maybe have just tuned in for the first time with us, they can see Ollie's. This is what we were looking up. It's more than 100% in the last 2 months and continues to rip through, even though it's in overbought territory. That's the reason I won't step in and buy it right now. It's this overbought. It's just too hot right now. But you look at Dick's Sporting Goods and look at the chart here, breaking up to 34 yesterday after we gave it. I mean, for the last couple of weeks, I've been telling you folks, this is a place to move. And I'm not trying to say I'm always right on this stuff, but this is a simple slam dunk type of piece where you look at it and say, okay, they're reopening their stores. Everybody's been itching out to get out. Dick's Sporting Goods has people just, you would think that they're giving away their stuff. There's so many people in the store right now. They're going up to $40. Yep, there you go, Jerry. It is packed just like so many of these other, and the Camping World is the other one that I can't buy right now simply because it's run such a course. Look at it up another 11% yesterday, but look how overbought this is. Camping World, another situation where it is just like Dick's Sporting Goods. People can't wait to get out and about. So Callaway falls into that category right now, and I think Callaway deserves a little attention from your portfolio. $15 looks to be building a nice support level. Look for a rally up to the 1750 area, and then it'll continue, and we're getting a little volume kicking in right now. And then one more. So I've got an extra QUAKER Chemical Corp. And this falls into that materials area. The KWR is a ticker symbol, a little more expensive at $175 a share, up 2.3%. Volume coming in. Short interest ratio is around 7, if I recall correctly, on QUAKER, KWR. Expect the stock to make a move back up to its highs right around 190 in the next month or so. A little slower mover and a little more of a volatility mover. You're going to have, this is a small cap chemical company. It's not a Dow Chemical. It's not, an Albemarle, which we closed out, which is a material company. Some of our night traders closed out 100% return on Albemarle yesterday. So it's not going to move that quickly, but you're going to get a situation where it's going to continue to edge up with this volatility rally up towards that 185, 190 level. The 50 days turned higher, 20-day crossed above the 50 and is crossed above the 200-day, and the volume's coming in. So love the, in this particular situation, love this play. Let me take a look at a couple of your questions here. Actually, I'm going to say, let me go through the trading today. Trading to Thursday, the bump day here. Go with the flow through the end of the week, folks. At this point, what's going to happen is we're going to see a little bit of, call it mania. We're going to see people going, oh, here it goes again. The market's going to go up 2 or 3% every day, just like when it was going down 2 or 3 or 4% every day. A little bit of mania kicks in here, especially crossing over the 3,000 level, the 200-day moving average, 25,000 on the Dow, etc. There are all kinds of things that you're going to see in the headlines that are positive. So you're going to get that last push of the FOMO money right now that's going to come into the market here. Last push means we're going to have a pullback at some point. I can't tell you exactly when it is because this is a little bit of mania buying right now, but it usually comes right after that mania buying. But the way you want to trade it here this week is you want to continue trading with that trend. Go with the flow in this case. Momentum is building. We should see the S&P 500 up around 3050 relatively quickly. And I think a goal after that is 3100. Eye on the large cap stocks as they are lagging. Start putting in targeted price buys on some of those. So let's start identifying stocks that are in that group. The Zooms, and that's not on the NASDAQ 100. But your NVIDIAs, your CREs, all of these stocks that are seeing some selling pressure, you need to start targeting a buy price, a re-entry price, and I'll have a few of those for you tomorrow. Last but not least, watch the SpaceX launch this afternoon. Somebody's going into space, and that's amazing. Maintain some hedges on the market. Don't drop the hedges. As I said, I've added to my hedges yesterday. And I just kind of dabbled around, and it was my ETF hedges. You know, some of those hedges that are, you know, tied to an ETF, tied to small cap, the SRTY. Let's look at a couple of your ticker symbols real quickly, and then I'm going to have to cut it off so I can get ready to trade. Shopify, buy the dip. Got this radio voice going today too, very calm and soothing. 700. Is what I'd be looking at for a level to, you're going to see some support at the 725 from the rising 20-day moving average. Look how Shopify has been up in that overbought territory. It's been one of the hottest stocks in the market during the COVID-19 for obvious reasons because of what they do. They're enabling the at-home sales and such, people getting on and using the Shopify to sell their goods. I think you look at 725, maybe 700. Pets, I shouldn't be answering pets because this is one of those that I love. Broke above the 20-day yesterday and then pulled right back down again. High short interest on pets, and this is Pets Med Express. This is not the pet store. This is, and it's not Chewy, obviously. This is Pets Med Express. I like the stock to break up above that 36 level and shoot back up to 41 here. I'm bullish on pets, PETS, GLD, gold. And I'll come back and get a couple of these. I'll hit Hertz as well. GLD, pulling back here. Remember the comment about the printing presses is money. I think gold is almost like one of those hedge plays where you just maintain it in the portfolio. Perhaps you add to it if you get below your cost basis on it. It depends how much. I don't think you jettison, if you will, I'll use jettison because space day, but I don't think you jettison gold from the portfolios right now. I think this is one where you actually look at it around 160 and see that consolidation. I can't believe Lyndon just asked about NFI because I was looking at NFI yesterday. But anyhow, look at 160 as support. Again, a little bit of retracement in GLD, and look at some of those gold miners. EOG is the one that I keep looking at here. I love the trend in EOG. Smaller miner, obviously. $50 is going to be support here. You got the 20-day crossing above the 50-day moving higher, and the volume starting to kick in. EOG, and then obviously Barrick Gold being one of the larger ones, seeing more of a reaction to gold pulling back. You look at Barrick when it hits 23 again. But I think long term, you're still bullish on gold. 160 is going to see some support on the GLD shares. ENPH, NFI. And I literally was looking at this chart yesterday because it's pulling back to its 20-day moving average and phase. I'm sorry, pulling back to that 20-day moving average at 55. There's quite a bit of short interest on this stock. That's why you've seen all of this volatility popping up. New report, my data gets refreshed. I believe it's tomorrow on the short interest. No, it's today. It'll be this afternoon. I get the new short interest data. This is going to be one of the first companies I check, simply because if the short interest didn't come down as much as I think it did, 55 is going to show itself to be nice support as long, and you've got an upside down for those of you that are technicians or like the technical side. You actually have an inverted head and shoulders here, shoulder here, shoulder here. Your neckline, somewhere right around in here. Here's your head, obviously. So if you come down and test and you have volume that starts to kick up as it breaks up again, it's a stock that's going to take off. Your neckline really is going to be that 57.5. Boom, 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 boom. And you've got two tests on both sides. All we need is an increase in volume and for that 57.5 to hold. And you got a stock that's going to blow itself back up to $70. Let me check out the Q&A and see if people have been playing nicely. And yeah, they have, and putting questions in there. Let's look at these. Freeport McMoran. I'm going to go through about 5 or 6 of these. So you got Freeport McMoran, FCX. Stock is more than Freeport McMoran. Actually, everybody thinks of it as gold miner. It is a metal miner. Heavy dose of silver. So you look at the SLV, heavy dose of silver in the in Freeport McMoran besides the gold. And that's why you see a difference or a divergence from EOG there, silver trading up above its 200-day moving average. And that's because it's an industrial metal, more of an industrial metal than gold. Gold is more of an industrial metal when it comes to technology and circuits and those things that conduct electricity. Silver being something, a different game, if you will. FCXO catching that bid from silver. The consolidation I like here, I don't necessarily, you can see Freeport McMoran kind of floats around and you'll catch a trend here or there. Really want to see that 50-day start to come up and give some strength to the shares before I say, hey, this is a long-term buy and hold. I think that you probably get a bounce up around this $10 and still going to continue to consolidate. Probably not going much of anywhere over the near term, over the next couple, let's call it the next couple of weeks here. In Orlando, and you're new to this, what's a hedge? You know what? Greg and I are working on a piece about hedges and 3 different levels on a hedge. Let me bump you out to that, or let me refer you to a piece that we're going to be putting together here on hedges, because everybody's asking about hedges. And it's going to be simple, 3 different ideas on a hedge. A hedge is a way to, I can't use the word insurance because that implies that it's guaranteed or somehow guaranteed, but it's a way to offset losses in a portfolio is a better way to put it, by using something that's going to appreciate, usually an inverse ETF or an option, a put option. If you're, a money manager, you're using options, in some cases futures, but you're trying to offset losses in your general portfolio just to kind of take the edge off. And then you use the proceeds from that hedge when the market does decline to actually flip over and buy more of whatever's in your portfolio that has taken those losses. So the hedge serves 2 purposes. One, to kind of insulate the account, the portfolio, by going up, having something that goes up when the market goes down. And then when the market is down, you take those proceeds in dollar cost average into the positions that have lost. And now it acts as putting more capital to work when the market's at its lows. Alibaba, 200. And I said 200 last week, guys. I've got to ring my own bell here. 200 on Alibaba. Watch the stock at 200. You get the 50-day trending higher, the 200-day right below that. I think you play around at 200 just a little bit more as the saber rattling keeps going on. Let's face it, I don't think we're going to see Alibaba delisted or kicked out of the United States markets. There'll be some solutions that come to bear before that particular step happens. So I think Alibaba looks good around that 200. I'd like to see a little more of a strong base right now. Win, I'm going to hit just because lots of casinos opening up in Vegas right now. Look at the pennant that's forming right here. You've got higher lows right here and then lower highs. This is going to be a battleground right now for Win, right around $80, 85 and 80, let's call it. If we get pulled back down, and I'm not sure where Win is trading in pre-market, but if we get pulled back down into that if we get pulled back down below that, it's trading actually at 87.68 right now. So you're going to break up. If you break up above this high, which is probably right around that $87, $88, I think you're going to see a breakout of win. This comes down to reopening. Everything reopening right now. This is also one of the more dangerous stocks, I would say, that have to do with reopening, because let's face it, the retail stocks, if the reopening doesn't work, I don't think you're going to see them close. I think you're going to see them go to curbside models. And that's what a lot of these clothing companies, these real retailers and malls are going to do while they're open, is figure out how they can stay open the next time this happens. So instead of closing the doors, they're going to figure out how they can have curbside delivery at the mall or curbside drop off at the mall, that type of thing. If the companies aren't doing that right now, then they are going to have their doors closed. The casinos are a completely different machine. If we have another recurrence or resurgence of the COVID-19, I think you're going to see the casinos have to close down pretty darn quickly. So one more question here from Zachary, and then I got to jump off. Derry, yes. Albemarle, I got out early. I needed to make sure that we logged a win on that particular position. I think there's some upside. Materials getting strength. Zachary, if you have an SPY hedge at 290, when is a good time to roll up, or do you not roll up? You either roll up right now when we're at 290, and let's look at a chart of the SPY here real quickly. Obviously, we're rolling up on 300. I would start adding. In my particular case, I'm just telling you what I would do. I'd look at rolling up, towards when we look like we're getting a little toppy right now. And from the view of this chart, that's going to be when the RSI starts to get up towards being overbought on it. You leave in some cases, you leave that hedge on that original 290 because anything can happen. And I don't know how far out it is, but at the same time, you know what, I'd start adding somewhere around the 300 to 305 or something personally is what I'd be looking at doing. And when I rolled up my hedges, that's exactly where I was looking, is the 300 level on the S&P 500. Any play on 8, it's given a little bit of a bump, not a long-term play right now. Best 5G stock, I like NPTN, Nancy, Paul, Tom, Nancy, and a cannabis stock. Y'all have to hit me tomorrow for that one, Naveed. I'll absolutely give you a question of that. I've been trying to play around with looking at the cannabis stocks. And Chimera, I'm actually going to knock everything out. Cruise ships going up 13% here and there. I like the fact that we see that. If you want to play the travel industry, and somebody asked about the airlines, take a look at Expedia, TripAdvisor, TravelZoo, some of those that have less overhead, because I think you're going to see we're getting a little euphoric about where the travel industry is going with the actual carriers and the cruise ships. Reality is going to come in some sort of dose, but travel is obviously making some sort of comeback. I know John has been saying that he wanted to go on a cruise. So there are people out there that are going to take a cruise. But at the same time, I think your easier play is on the electronic booking type of companies that are going to let you do that online. And they don't have to pay for boats and planes that are sitting around doing nothing right now and have a risk of sitting around and doing nothing come around November or October. So there we go, folks. What a great day. 45 minutes. That was easy. I did have my radio voice on all day for some reason. I didn't get all crazy excited. Hope that everybody has a great day trading. Hope that everybody gets to 4:30, their televisions at 4:33 and gets to watch a little bit of history happen. And I wish you the best trading success. And Greg and I will see you tomorrow morning. Have a great day, folks.